If you're married as of December 31st, you basically have two options on how to file: married filing jointly or married filing separately. Most of the time, for tax purposes, it makes more sense to file jointly. Now, there is the third option on how to file. It is head of household. However, there are lots of criteria you have to meet in order to be able to file as head of household. I'll go over those towards the end of the video. So if you want to just skip ahead, go ahead and get that done. Now, like I said, it makes more sense to file jointly than it does separately. However, I'm going to go over some of the reasons as to why it does make more sense to file separately. Now, this is not a comprehensive list, but it does cover most of the reasons why. Number one, the reason why you'd want to file separately, most common I see, is because of student loan repayments. These repayment plans are based on your income from your tax return. So if both spouses are generating income, you file jointly, that income is going to be higher than if you were to file separately, i.e. your payment would be higher. So if you file separate, lower payment plan. That's generally why a lot of people file separate tax returns. Number two is because of medical expenses. Medical expenses on a tax return are limited to 7.5% of your income. So if you make $100,000, anything over $7,500 is deductible on your return. So again, if we have two spouses generating income, it would make more sense to file separately if you got high medical expenses, just for this case, because your income would be lower, i.e. that 7.5% would be lower, more you can deduct. Number three kind of piggybacks on number two here. It is casualty losses. These are limited to 10% of your income. So based on kind of the prior reasoning, that's why you would file separately, because your income would be lower, i.e. you'd be able to deduct more. This is for federally declared disaster areas: floods, earthquakes, hurricanes, fires, etc. Now, other reasons you want to file separately that are not financially related is, I'd say, number one, you don't want to be liable for your spouse's taxes. Maybe they're doing something shady. You don't want to be involved. You file a separate tax return. Another reason is you want separated finances. Maybe you're going through an unfortunate divorce and the lawyer says we need to start separating our finances. So you got to file separately your tax returns. Last but not least, maybe if we file separate, one spouse may get a refund, the other one has a tax bill. You want to protect that refund, don't want it to get snagged by that tax bill over there if you were to file jointly, right? It would just kind of all go together. Then you would file separate so you can actually get that refund. Now, if you do decide to file separately, there are some things we have to note here. You will still need to include your spouse's name and their social on your tax return. You can decide to file joint one year and then the next year file separately. So from year to year, you can kind of piggyback or swing back and forth here from joint to separate. However, one thing you have to know, if you do file joint and then you want to amend that return to be separate, not possible. But you can go the other way. You can file separate and then amend to go joint. All right, so community property states. There's quite a few of them. I'll quickly list them: Arizona, California, Idaho, Louisiana, Nevada, New Mexico, Texas, Washington, and Wisconsin. If you live in one of those states, you should report the income based on your state law. And a lot of times that state law would negate kind of the reasons as to why you would file separately. However, this is kind of a rabbit hole of a topic, and I would highly recommend that you discuss this with a tax professional if this is something you're considering and live in one of those states. All right, so here are the reasons why you want to file jointly versus separately. We've already discussed that it does generally make more sense, and here's kind of why. Number one, itemized versus standard deduction. If you file separate, if one spouse itemizes, the other spouse needs to itemize, and vice versa. If one does standard deduction, the other needs to do standard deduction. This could be a big negative, especially if one is itemizing and they got a lot of mortgage interest and the other one essentially has nothing. Number two, there are a whole bunch of credits and deductions that get limited when you file separately, so it makes more sense to file jointly, right? Okay, I'll kind of go over most of the common ones, okay? Child dependent care deduction. So you're paying for preschool or after school care, something like that, and you want that credit, filing separately, probably not gonna get it. Education credits. This is for what they call the American Opportunity Tax Credit and the Lifetime Learning Credit. These are for essentially university, higher education. Big credits here. they essentially get wiped away when you file separately, as the adoption credit, the earned income tax credit, the student loan interest deduction, capital losses. If you buy, sell stocks and you have a loss, if you file separately, you only get to have up to $1,500 of a loss versus joint, you get double that, $3,000. So kind of a lot of credits that do get limited when you file separately. Another big reason as to why you would want to file jointly versus separately is to fund a traditional or Roth IRA. Now, I'll include links in the description below for the IRS's website that show, what kind of income based on what kind of filing status you have and how much you're able to contribute to what retirement account. Bottom line is, if you file separately, these deductions get limited real quick when your income goes above a small amount, essentially. So it makes more sense to file jointly because you will be able to contribute more to a retirement account, an IRA, and a Roth if you file jointly. All right, so that third option that I said at the beginning of the video is the head of household. And the qualifications that you need to be able to claim head of household if you're actually married are these. Number one is your spouse didn't live with you after June. So essentially July to December, your spouse wasn't in your house. Number two is your child's home needs to be their main home for more than half the year, and you paid for more than half of the cost to keep up the house, and you meet the qualifications to claim your child as your dependent. All right, well, I hope the video was helpful for you. If it was, please help me out by hitting that like button, sharing with anyone you think this might be able to help out as well. Thank you so much, guys.